Wagner here. Approximately 11 a.m. in Honolulu, making it 4 o'clock in New York City. It is Thursday, the 2nd day of February, 2012, and this is the Daily Report for gold and silver. We have a strong market moving to the upside today, across the board in precious metals. First of all, up about $16 in gold, as you can see, $17.59. Very nice move. And when we take a look at the percentage, it's almost 1% gain on the day. You've got silver up 67 cents, and that's made a 2%, just shy of 2% move on the day. Platinum and palladium, of course, are following suit and are higher. In a comment made by Fed Chairman Bernanke, he really didn't say anything new, but what he did do was highlight and strengthen the commitment that the U.S. Treasury and the Federal Reserve have right now for keeping our inflation in check and vis-a-vis interest rates near zero through 2014. That kind of a pledge really set these metals on fire and set them flying. There's also talk right now about Greece continuing to get in trouble, or better put, not be able to get out of the current debt crisis they're in. First chart I do want to look at today, this is a intraday chart, 360-minute chart. It is of cash gold. As you can see, I have at this point still not numbered any of the sub-wave within this wave one. My belief, first of all, is that we are still clearly in wave one. In terms of the sub-count, we might be in a sub-count of 3, but I'm not really convinced I have a good take on the count just yet. But what I do know is we have a sustained rally. 1, number 2, we're in at 1580, and 3, we have stopped $60 below where the market is trading at. I feel very good about that. Now, when we blow this up, what you can see is that we still have the solid green all the way across the board. You've had these couple of sideways areas, and we've covered this, I think, to death. So today is going to be the last day, and that is the nature of the way that the market has been trading, rather than that classic seesaw pattern, or sawtooth pattern, I should say. What we're getting is an uptick. We're getting sideways, uptick, sideways to down, uptick, sideways, and then you get these big spikes, and then the market tends to trade sideways. I think that that's characteristic of a tremendous rally and the kind of rally that we are currently experiencing. Now, the next chart that we'll look at this morning is going to be a straight daily chart. It is in candlestick format, and we will try to remember to place it into Henkin before we move on to the next chart. As you can see, this is the move for the day. Solid up candle in terms of the size, straight candlestick. 120-minute simple moving average. You can see that we're well above that. That was 1706. Our stops are below 1700, and that is, to me, the right place to keep it. Keep it loose right now and see where this market wants to go. We will also go ahead and look at our Henkin Ashi, the Japanese average, and take a look at to see how that is. And as you can see, when we look at this, let me go ahead and blow that up for us, traders. You can see that we have solid, strong candles. In terms of the size, they're not that large because they're comparing them to the midpoint where we've had nice moves, but we have the absence of tails. We are still solidly green, and that to me is indicative of a market that will probably continue higher. Last chart that I want to look at is our weekly chart. And our weekly chart, you can see that we've got really a solid move in the marketplace on the Henkin candle. When we go ahead and convert it back to a regular candlestick chart, you'll see that when we look at each week, we have had solid weeks of gains. We're here on Thursday. We've come well off of the low that we had right at the beginning of the week. We're trading up near the highs, 158.72. To silver. Silver has been just a stellar performer, up about 2% on the day today. When we take a look, the first thing I want to look at is a standard candlestick chart. This candlestick chart is of the cash market. The cash market in silver currently trading 34.30. We're in 28.10. Tremendous range that we've seen. We are coming close to my first target. Now, I think that long term we're definitely going to take this target out, but I do want to see how it reacts if I should say, it gets to this point of 35.35. Now, why is it significant? One, it does come up with a good, strong Fibonacci number. You can see that we really blew through these highs right in here without any issue. So the next set of real highs that we're going to have, any kind of resistance, should be right around $35. If it's able to just take that market out, I will then give you my next targets up here, but let's see how it reacts right within this area at 35, and that's roughly $1 from here. But traders, I think that without a shadow of a doubt, we have a good opportunity to see that market move there. I'm going to go ahead and convert this daily chart into our Heikin Ashi, and what you'll see is something very, very similar to what we have seen in the gold market. And that is that we have this nice candle in terms of a green candle, absence of the lower wick. But what's interesting is that we had a couple of down days in silver just prior to this, and you can see that on a Heikin chart that came out as a 2 doji. So again, we had a scenario just like we have had in gold where the market rallies strongly, it trades sideways for a time, and then it begins to pop back up. Traders, obviously, let's maintain our long positions, maintain our stops. We've got a great trade underway. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly review and wrap up. Bye-bye.